Good morning, everyone, and welcome to this webinar on retirement planning. My name is Roshan Kanasan. I'll be your moderator for this session, and we're very excited to share with you what makes a good retirement plan. Now, you're encouraged to use your register in this webinar using your real name in order to be part of the promotions at the end of the webinar. And so basically, don't log in anonymously. Sign in using a webinar login. And we've got a Q&A towards the end, so please put in your questions down below. Now, just a few things to take note of before we dive into the main part of this conversation. Principal, this is just a few disclaimers to take note of. Principal is not sponsoring any of the, hold on, just next slide. Okay, in any case, just a few disclaimers. One of them in particular is that Principal is not sponsoring any of the speakers here, and their opinions are the opinions of their own opinions, and not the opinions of the company themselves. And here are the few other disclaimers. Just take about 30 seconds to a minute, depending on how fast you can read, to go through them. And let's take a look at, first and foremost, a big thank you to Principal Asset Management for this opportunity and for putting together this webinar with 4 exciting panelists for all of you today. Now, before we dive into the webinar itself, here's a little background into Principal. Formerly known as CIMB Principal Asset Management Berhad. It's an established fund manager with over 25 years of experience in helping Malaysians invest. It's an award-winning fund house and recognized as one of ASEAN's top management houses, and offers a variety of solutions and for a variety of needs for Malaysian investors, with over 90 fund choices to help diversify your portfolio. And here we are seeing on the slide right now, here are some of the awards they've gotten in their time, exemplifying their experience in the industry itself. And now for a few words on Principal's behalf, we have Ben Kwa from Principal to take us through a few words. Ben, can we have you on, please?
Hi, good morning, everyone. Salam Sejahtera. I thank you all for attending our webinar for today, and I am really excited for this webinar. We have lined up some of Malaysia's top financial bloggers who will be sharing their own experiences in retirement planning. I also want to take this opportunity to congratulate you guys, to take a pat on your shoulder for taking some time off your Saturday morning to learn about retirement planning, which means you are committed to your retirement, which also means you are committed to your future. I hope that you will enjoy the session that we have prepared, and hopefully you will be able to take good takeaways and can use all of this for your retirement planning. At the end of the day, our objective is really to make retirement planning easier for you guys. With that, I hand it back over to you, Roshan.
Thanks, Ben. And indeed, a big props to everyone who's joining us today. It is a Saturday morning. You could be anywhere else doing anything else really at this point, but it's really good to get interested in your retirement planning now, because if you don't do it, no one else is going to take care of you later on. Now, this is the agenda for today. We've got approximately a 45-minute discussion, followed by about 15 minutes of Q&A, depending on how many questions you guys put in the question box down below. So be sure to put in your questions there. There are no silly questions. Financial literacy in Malaysia is a very big band. So let us know what are some of the questions you want answered specifically to retirement, though. So let's not go too far wide here. We'll answer these at the end of the session. Now, a few other things to take note to just get the landscape of retirement in Malaysia. But before that, hold on. Let's meet the panelists. Yes, the most important people today. We're starting off with Peter Yong, otherwise known as Mr. Money TV. Peter, are you there?
Hello, hi, can everyone hear me?
Yes, we can hear you, and now we can see you, Peter. Thank you so much for wanting to join us.
Firstly, thank you very much, Principal, for inviting me. It's really an honor to be here, and thank you, Roshan, for moderating. Yeah, so just a little bit of my background. I've been in the financial planning industry for the past 10 years. I'm a registered financial planner. And over the last 2 years, I've been focusing on building a YouTube channel that shares financial literacy with Malaysian public. So we focus on making financial literacy fun, because over the years, many people actually say that, hey, money is very complicated. Money is very, boring subject. So we try to make it fun and entertaining for people to learn. Yep, so thank you. Pass it back to Roshan.
Thanks for the introduction there, Peter. Good to get a bit of background into each of the panelists. And speaking of the rest of the panel, we also have Suyun Ong, who's also a YouTuber focusing on the personal finance and financial aspects of life. Suyun, could you give us a quick introduction to yourself, please?
Hi, everyone. Good morning. Okay, so hi, Roshan. Hi, Principal. And hi, everyone who are here on the webinar with us. I started my YouTube channel a year and a half ago, and I'm actually an employee. I'm not a financial planner. I don't have a finance background. I did study economics though, and I believe that, money is something that all of us want to figure out. And once we figure it out, we are able to lead the lives that we really want. And then we are also able to impact others positively around us as well. So I wanted to be able to discuss all these things with more people, because not all of us have the luxury of having friends who are already very, how do you put it, woke in this situation. I guess that's one way of saying it. So yeah, accessibility is important. So that's why I do YouTube videos.
Thank you for your introduction there, Suyun, and I can't agree with you more. Woke is probably one of the best terms to use in terms of this personal financial wokeness. We're going to go with that from now onwards. Up next, Ezami, majalalabo.com. Eza, could you give us a quick introduction to yourself, please?
Hi, Assalamualaikum, and very good morning to everyone. Thanks, Roshan. Thanks, Principal, for having me, and also to the panelists. Good morning to all of you and those who are tuning in. So I've been blogging for the past 10 years. Actually, it's more than 10 years ago. And just recently, in 2017, I started Majalah Labo. So it's a platform for all of us actually, to learn about investment, about retirement, about savings, and all this. So it's in Bahasa Malaysia. So it's updated with daily content. So thank you very much for having me.
Yes, and thank you so much for joining us today, Eza. And it's really important to note that, when it comes to accessibility and awareness, having content in Malay language is so important, because there are so many people in Malaysia who read and write in their own native languages, right? Whether it's Tamil or Mandarin or, well, the national language. Up next, we have, for the final panelist today, Ishwan of nomanila.com. Ishwan, why don't you give us an introduction?
Okay, thanks Roshan, and thanks everyone for being here this morning, and of course thanks Principal for having me here today. And my name is Yixuan, and it's really exciting to be here today with all these amazing individuals and panelists. And I've been writing. I'm a personal finance and lifestyle blogger on nomanila.com, so it's my baby blog. And it has just recently celebrated its 2 years birthday. So, and personally, I'm a economics graduate from University of Malaya. I just graduated around 2 years ago. So I consider myself pretty fresh into the reality, I guess. So this blog, No Manila, is kind of a way for me to journal my adulthood journey, and also for me to write things down that write down the things that I've learned. So in short, I love writing, and when it comes to the topic of adulthood, money seems to be one of the things that intimidates people, and hence the reason why I want to journal this down, to share my personal journey, as well inspire more youth or young people around me to take on their personal finance journey. So back to you, Roshan.
Thank you very much there. And I think is your blog just limited to people with no money la? Is it just that, Yishwan?
Well, I guess we all started off with no money la, and we go somewhere.
All right. Thank you for joining us this morning. It's really a pleasure to speak to all of you, personally speaking as well. I've been wanting to chat with you all for ages. Thank you, Principal, for putting this together. Now, before the discussion itself really begins, here are a few things to take note of when we talk about retirement planning in Malaysia. Now, first fact number one, only 40% of Malaysians consider themselves financially ready for retirement. This is from Bank Negara Malaysia report from 2018. Number two, when it comes to the amount you need, a retiree would need an estimate minimum of 228,000 ringgit in today's value when they retire, to generate sufficient income to live for the next 20 years, sorry, not until death, but the next 20 years, because the general timeline is until 75 years of age. That's the estimate that is used. And fact number 3 today that we're going to be using as a base jump-off point is that more than 75% of Malaysians find it difficult to save even 1,000 ringgit for emergency needs. This with the economic uncertainties and high cost of living, and not just because of the pandemic, but over the last few years. This is a statistic that has come up quite often, actually. So with these 3 things in mind, I'd like to start off with the question of when it comes to retirement planning, what comes to your mind? And this, of course, I'm going to pose to the panelists ahead of us here. And again, I'd just like to remind everyone that these are the opinions of the panelists themselves, and not the opinions of Principal Asset Management Malaysia Berhad. All right, let's start off with Peter. Peter, why don't you give us your thoughts here? What comes to your mind when you are planning for retirement? What are some of the key things that to come to mind?
Thank you very much, Roshan. Yeah. So for me, myself, ever since I was much younger in high school day, I was always given this advice that, start with the end in mind. They always say this, right? Yeah. So one thing for sure is, for me, even when I talk about my life and everything, I always try to imagine what happens by the day that I pass away. And we all know this one thing, no matter how good your life is, you're remembered over the last few years of your life in that sense, right? So, so you can be very successful in the start, but maybe your last few years you're broke, then you're probably being remembered about that, So I myself personally think that there are a few things that you have to keep in mind. Is that number one, what do you want to be remembered as? Yeah. Are you going to be someone who's going to be asking for money because you didn't plan well ahead? Are you going to be someone who is, living a comfortable life and at the same time helping out other people around you to be successful? What is it that you have in mind when it comes to that? And when you have that goal in mind, then it's much easier for you to design your financial plan to reach there. Yeah. So one of the things for myself personally is, I think it's very important to redefine retirement, because coming to today's age, I don't think retirement means that you just totally stop working. And that's the reason why I always love to explore business rather than just employment itself. Yeah, because business is something that I can keep going, getting an income, and decide to work on it even post-retirement, age supposed to be. But having that full option of doing it as I wish, without a boss telling me, you got to be at work by 9 o'clock. I just work on it as much as I like. Yeah, and so those are some of the things that you really have to think about and pick up the certain skills that allow you to do that as well. So that is for myself. And so I always believe that by the time I retire, other than having a stash of cash that can secure me, it is also a part of having something that generates a consistent income, so that even if, let's say, the market is down during that period of time, or like during this particular period, economic is bad, the income still comes in. Like I've known some people during this period who are supposed to retire this year, and they've accumulated quite a good amount, whether in stock market, whether in other assets, but because the times are bad and they're going to retire the next month and they're going to start drawing out, and those are problems. Yeah. So that's what comes to my mind.
All right, Peter, do you have any thoughts on how much you need for retirement? Like, how do you do that math personally for yourself?
Personally, for myself, I always start off with thinking, what is actually the basic necessity that I need on a monthly basis to actually live a comfortable life, I would say. Yeah, so probably about like 6,000 by today's standard. Yeah, that's like the basic. Yeah, so then you take into account of that 6,000 a month, and then you add on inflation. So for those of you who are actually familiar with time value money calculator, go and calculate how much 6,000 of today's standard will be worth by the time you retire, and then you work backwards with the mathematics.
Yeah, don't worry. There are calculators online for you to do all this. You don't have to do it manually. Otherwise, you might want to hit your head against the wall. Peter, background. Are you single? Are you married? Do you have a kid? Because all of this matters when you're retirement planning, right?
Yes, I actually have a kid. My kid is close to 2 years old right now. I have one wife, yeah, happily married. And I have to be very honest that before I was married, the way that I think about retirement is very different from right now. Yeah, so it really does change your perspective in life when you have a kid. Yeah.
All right, Peter, thank you so much for your thoughts here. We're going to move on to Suryan now. Suryan, as a fellow personal finance nerd, and this is the term I like to use, what are your thoughts? What comes to mind when you think about retirement planning?
Thanks for that reference. I definitely consider myself a nerd. So for me, I'm a bit different when it comes to retirement. Normally, we jump straight to how much we need, but after reflecting about this for, I guess, a good 4 years since I started investing, I've been looking more into how I want to spend my hours, because once we retire, we have way more hours in our day or in our days than we have right now as we are working. So if you've ever been unemployed or in between jobs, you'll find that the hours can really go by very quickly if we don't really have something that we want to dedicate our time to. And for me, in the periods where I was in between my teaching job and my current job, I really spent too much time watching TV, and that's definitely not so healthy for the mind nor the body. So when it comes to my retirement planning, I'm trying to figure out what I would like to dedicate my time to. And for now, the answer that I have is I really love spending time with the people that I care about. And if I get to retire early, which is not actually my objective, I would also like to be able to retire with my friends and my family where they also are financially independent or financially stable, because it's quite lonely if you are the only one who is like financially free. So that is something I am working towards as well.
Right. That's actually a really good qualitative way to look at retirement, right? Because it's very, very, very important. I need to emphasize that you have the monetary means when you retire, but also to think about how retirement looks like to you. And thank you so much for highlighting that. One more question for you, Suyan. What are your thoughts about income? Do you want to work when you're retired? Is that something that you're in your retirement plan? Are you still thinking about active income, or is it going to be if all things go according to plan, right? Or is it going to be passive income and you're going to travel the world or something like that?
Okay, so the big plans, the idealistic plans for me is that I'm going to live off my stock portfolio, but I would also love to be actively working, because I don't know, it's something about having time in your day to do meaningful active work that also matters as well, because the brain is a very complex thing, and I guess I've met personally a lot of people who have been very active in their work life, and then just because suddenly there is some nothingness after you retire, or mental degradation is an issue. So that is something that I am also worried about. So in order to mitigate that, I will continue to work. And also, I just read this book. I think everybody should grab a copy or find the article online. It's called The Psychology of Money by Morgan Housel. I think that's how you pronounce it. And he talks about during retirement, there are 3 things that we should really look into. One is the hours, how we're going to spend our hours. And then the second is for our medical expenses. How is that going to be covered? And the third one is what kind of income are we going to be generating or relying on during our retirement? And I think that kind of really succinctly summarizes some good aspects to focus on.
All right, great. And last question, sorry. Do you have a number in mind in terms of how are you calculating your retirement needs? And if you don't have one now, that's great, because you've given us a lot to cover already. Sure. But do you have, what's the math looking like for you?
Okay, so I do have a number in mind. It is definitely way more than I need, but here are some useful calculations. So I've come across 2 methods, and the first one is called the safe withdrawal rate of 4%. So you can look it up, you can Google. And basically it's saying, what did it say? Your expenses times 12 months times the number of years you're going to be in retirement, whether it's 25, 33, whatever that number is. So that is how much you need in investments, and then you will be withdrawing from that at 4% every year, and that also kind of counteracts inflation, because if your money is in investments, it will be growing at a certain rate. So let's say just a S&P 500 average 7%, so it's accounting for inflation already. And the other method is 2/3 of your last drawn income before retirement. That is what you aim to have in income every month. So up to you of how you want to calculate your number.
All right, great. Thank you so much for that. And up next, Ezami of majalalabo.com. I'm so sorry, Ezra, I almost called it Majalah Dapo. Totally two different things, both important to your personal needs in life, right? The Dapo and the Labo. Ezra, what do you think about when it comes to retirement planning?
Okay, I think it boils down to at what age you are now, because especially when you are young, you're taking a more risk in your life. And right now, I'm considered middle age. Next year, I will be 40. So they say life begins at 40, by the way. So you already have your why actually. To Peter, where he says that your life change when you have a kid. So now I have 4 kids. So can you imagine? So no longer about me. It's already about family. It's already about your children. It's already your spouse. It's already about what are you leaving to them once you are retired. Because as a parent, you want to take care of your kids, make sure that they have enough education fund to take them to college, whatnot, for their future. And for me personally, I would like to leave the world as, without no debts. So that's my goal number 1. So it's all about making sure that you have enough income to cover your expenses, especially for the retirement. So for example, if right now you're spending 5,000, 4,000 to pay off your car, your house, and your other expenses. So it's just a matter of replacing the income, that 4,000 that you used to spend, and make sure that for me, in order for you to have that, you need to have a passive income, because we all have a retirement age in mind. So for example, if you plan to retire in 55, so make sure that your passive income or income from your portfolio is enough to, in order for you to sustain the expenses every month.
All right, Ezra, thank you so much for that context as well, right? Because when you do have a family, things change, and you want to make sure that your family is taken care of, whatever said and done. So thank you so much for sharing that. When it comes to you, I think you've already covered this. I think you've covered how much what's the math like, right? It depends on how much you're spending today. You want to leave a legacy for your kids as well and your family. I think I heard your kids in the background. Tell them we say hi after this. And is there, we'll get into the things you're doing in just a little bit. But Ezra, thank you so much for that. And for our final panelist today, Ishwan, thank you so much for joining us today. Why don't you give us your thoughts on retirement planning here? What comes to mind? And correct me if I'm wrong. I think not that it means anything, but I think you're the youngest amongst the 5 of us here. So maybe that can add some context to your answer of how you're thinking about retirement planning.
Well, thanks, Roshan. And to be honest, it is a little overwhelming at first, because listening to how Peter, Suyin, and Ezra talk about their retirement planning and stuff, I feel like, oh my God, I think I haven't thought of this enough and deep enough to really put value, right, into such depth to the audience. But for me, right, I think somewhat I can share my perspective here, because I do agree with one particular thing that Peter shared, right, which is we need to start redefining retirement, because a lot of people tend to think once they retire, right, oh, then that's it, right? So you gotta play mahjong or play chess or something, right, on a daily basis, but that, I believe that's not the case, right? If we need to start to redefine retirement, where we are in the stage where if health permits, we can still do things, right, that we are passionate about, but without the baggage or stress of behind fulfilling financial commitments in our life. So which comes to my next point, right? When talking about retirement planning, what comes to my mind is, in short, actually 3 things, right? Number 1, I would like to have a strong passive income structure that will help me, that will support my daily life moving forward, right? Whenever I decide, okay, that's it, right? I'm going to retire, but I'm still going to keep doing the things I like without the financial stress. So first of all, a solid passive income foundation, right? Secondly, I think this one is something that I would really want to do, right? By the time I decide to retire, I will be debt-free, right? Meaning, if I have a loan or if I have a mortgage, right, those are all well paid off, right? Or if I have children where I have to pay for their education, right, that's all well financed and all done. And lastly, number 3 is also quite important. It's about the medical part of the puzzle, which is my medical insurance or all the financial protection are well in place so that I do not burden my loved ones when should things were to happen to me. So I guess it boils down to all these 3 things, right, when it comes to retirement planning. And again, right, I do agree with Ezra, right? Life only starts when you are a bit when you are 40 and above. So for me, technically, my life haven't really started yet. So so I think, but nevertheless, it's good to hear from all the panelists here today, and really got me thinking, okay, how should I angle my retirement planning towards, right, the qualitative and the quantitative part? Yeah.
Thank you so much, Ishwan. And I think although life may begin at 40, being younger, you can tap into the powers of compounding interest, right? I think that's Warren Buffett has described it as the 8th wonder of the world, the 9th wonder. I'm not sure how many wonders of the world we have at this point in time, but just to round up a few points here: retirement age, lifestyle, income during retirement, your existing retirement savings, and inflation. Just a few of the criteria to think about when you're doing the retirement savings mathematics and all of that. And I know it sounds intimidating, but what you got to do is you just got to take it a step at a time, right? You just got to take one step at a time. And for more insights into how to take it one step at a time, we go over to question 2. I'm going to be asking the panelists what exactly they're doing for their retirement. So we've gotten a high-level understanding of what they think about when it comes to retirement. Let's find out what they're actually doing, whether they're putting their money where their mouths are. Peter, let's start with you. What are the things that you're doing for your retirement?
Hello. Yeah. So probably I'll just start off, because there's so many things that actually I'm doing for my retirement, right? But I'll just focus on 1 or 2.
Sure.
I think one of the things is exactly what am I doing? YouTube. Right? Why am I doing that? Is because it's something that I can do even post-retirement. Yeah, even when I'm 50 years old, 60 years old. I have this crazy dream that one day I'll be having a full beard, like Roshan's beautiful Lorry beard. Yeah, and with a nice tattoo sleeve and able to talk about finance still online, and people still want to listen to this old guy. Yeah, because I think I think that is what I want to do. And it keeps my mind fresh even when I'm older, like what Yishan and Suyin have said, post-retirement, you still got to grow. I always believe that you still got to grow. So unlike if, let's say, we are talking about like in employment, and at the moment your boss tells you, hey, time to go, see you retired, then there's nothing much that you can do from there. So this is my way of actually building a lifetime career that I can do all the way until I go to the next life, after that, right? Continue generating income for myself. Yeah. And the second thing that I actually do is that I make sure I invest my money. Yeah. I always make sure that my money is invested properly. Yeah. So one of the things that I do is that when I was younger a bit, I invested quite a lot in properties, and nowadays I invest quite a bit in stocks. Yeah. I personally also hold a little bit of unit trust as well. So these are some of the things that I'm doing for my retirement in terms of investment and business.
Thank you so much for sharing. Let's go on to Suyin. Suyin, what are you doing for your retirement planning? We've gotten an understanding of how you think about it. It was very qualitative, but on the quantitative side of things, what are you doing?
Okay, quantitative side, it's quite simple. I've broken it down in a video before. I use backwards induction. But there are 3 main things that I've been focusing on in the past few years, which is saving money, or how we spend our money, and then earning money and investing money. So these are the three components that I am really honing in on. And for my retirement specifically, I've been learning how to build wealth through investing in assets. And for me, the asset class that I chose, because it suits my personality, is stocks. Yeah, I do have some ETFs, I do have some PRS and unit trusts as well through EPF, and also I invest. And also just, increasing my income, because I am quite young. I'm not as young as Yishen, 28 this year, but I think increasing our income sources is important, as we have learned in this pandemic that, one can if we just rely on one, it's very risky and it can get compromised quite quickly. And yeah, so I am working on that. Income sources or side hustles is a big buzzword right now. And I think it's quite interesting that we get to spend time to figure it out. And I know it's a lot of pressure to figure it out, but it will come as long as we dedicate some time during our days to work on it.
And what are your thoughts on, do you have a percentage of your income that you save every month? Is that a rule that you go by?
Yeah, I love this rule. Okay, so if you haven't checked it out, everybody please check out The Bucket System by Scott Pape. He's an Australian writer. And basically your money is separated into buckets. So, oh my gosh, blowing is basically spending it, and then you are growing it, and there is Mojo, which is your emergency fund. So for me personally, I'm a bit of an extremist because I am young, I'm living with my parents, I'm really milking this to the full hilt. I save 78% of my income because at the moment I can, and I know it is temporary. So the moment I move out, I can kiss that high savings rate goodbye. So I'm really just I'm really just doing my best to, do this at the moment while I can, because I'm looking at moving out and all of that jazz next year.
Yeah, I don't know whether any of you heard that, but my jaw dropped and broke through the table, hit the ground when I heard 70% saving rate. Well done. Even for someone who, like you said, you've highlighted some of the advantages that you have. Even then, the discipline to save 70%, having access to that excess income, is a very, very laudable thing to do. And really, congratulations.
Thank you.
Now, let's take Ezra. Why don't you give us your view on this? What are you doing now? Obviously your conditions are a little different. You're in your 40s. Life is just beginning for you. You've got 4 kids. You've got a wife. What are you doing now for your retirement?
It's actually back to basics actually. So the financial figures, they say that you need to have 6 months savings for your emergency. Then you need to have your investment, diversification. Don't put all your eggs in one basket. Then how much protection? 10% protection. So it's actually back to basics because it's a proven and time tested. So that's what I'm doing right now. And because during my early age, during my 20s, so you have lots of energy. So you tend to experiment here and there, do that. You tend to explore more and take more risks. So once I hit my 30s and I have more kids, so that's where you try to not taking risks that much, and you try to diversify as much as you can. So what I'm doing now is I have my own financial planner to take care of it. So the financial planner will advise you on what are the things you need to do, what are the things you need to achieve, what are the things you don't do. So I've been heeding the advice. So it's actually a good way for you to learn things, is because you have your own methodology or you have your own way of doing things. But having a professional to advise you accordingly, so that's why you also need to have it's like a second opinion actually. So you think all this while what you're doing is okay or on the right track, but actually once you get into this stage, a financial planner will be able to advise you more in a more structured way. So that's what we are doing. And my advice to you is to start earn more, because it's not about cutting down on your expenses or living prudently. So it's a matter of trying to earn more so you can do more things actually in your life.
All right, Ezra, as someone in your 40s, is there anything you wish you had done 10 years ago or even in your 20s differently? Is there anything that you wish you had done more when it comes to retirement planning?
Okay, that's the thing. Back in those days, so we don't have internet as fast as we have, and we don't have social media as well. So it's all a matter of living through those mistakes. So my advice to every one of you here is to learn from all these experts and try to implement them as early as possible. So the fact that you are joining into this webinar session is that it shows that you are doing something in your life. Because back then nobody told us on what to do, so we only heed advice or from those who are not capable, or for example we heed ill advice. So my advice to you is go through all these people and learn from the experience by reading books or even joining seminars such as this. So you'll be able to expand your horizon and not to do the things or not to do the things that you weren't supposed to do in your life.
All right. So basically, continuous learning, and I guess curiosity is very good, right? And I think personally, what I found powerful is like, you may be woke, but you may have friends who aren't. So sharing links to articles or even Instagram posts, right? Little things here and there can spark that curiosity in other people that think about their finance, especially those that you love right around you, in your own family, your best friends, that sort of situation. Ezra, thank you so much for sharing. Let's move on to Ishwan, and to wrap up this conversation on the things that are being done, the actions themselves. Ishwan, what are you doing in your life right now? What are the exact actions that you want to share with us when it comes to retirement planning?
Right, cool. Thanks, Roshan. I think again, being the last and the youngest to haven't listened to Peter, Sui, and Ezra, I think all of them really put in very, very solid points. But I think there's something that I want to add on, which is something that I really that I put a lot of emphasis in my life right now. This is also something that I have been talking to Sui in the video that we shot together a few months ago, which is routine. So at this stage of my life, right, when it comes to retirement, I'm actually putting, again, this is what we are talking about, a long-term 20, 30 years thing, right? So at this point in time, at this age, I think it's super important, right, for people to start building up a routine in their life, right? It could be it could be a financial routine, it could be a life routine, right? The point is you need to start developing a system or a discipline in your life where you are able to handle your money and plan ahead for what you want to achieve in life. So as an example, right, a financial routine at my stage of life is where every month end I do my financial review, right? I keep track of my net worth, right? I keep track of my income, right? I keep track of my expenses, right? And I go from there, right? I plan every month and I plan ahead, right, for what's to come. So I guess this is something that is very underrated, right? It's not talked about as much as the money itself, but I guess when it comes to money, routine is the backbone of money, right, or backbone of personal wealth. So if there's a book that I can recommend, it's called Atomic Habits by James Clear. Highly recommend the book, super useful. So if that's my main highlight when it comes to planning for my retirement. But right, I would also like to add on 3 points, just a quick one. So number one, increasing my earning power. So how do I do that is through my blog right now is a side hustle. I don't even know whether this is a side hustle anymore, but it takes up a lot of time. So well, I guess it's considered a high hustle, but nevertheless, right, it's something that I'm building towards, right, to help me generate a different stream of income for me, right? And also, I'm also pursuing the path of becoming a full-time funded trader, right, in the market. So this is not something that I'm still working on, right? It's still in a work in progress. So that's number two, right? Increasing earning power. Number three is about investing. I think I will just go through this briefly, right? Building up a very strong financial routine, which includes investing on how much do you want to allocate money to your investing routine on a monthly basis, right? That's number three. And number four is, I think it's all about learning, right? At this stage of life, or even at any stage of life, I believe we are the student of the market, we are student of life, right? So reading books, right? having a licensed financial planner to help you out with your finances and give you a different opinion and perspective is super important. So personally, I have a licensed financial planner to help me out with my finances, right? So super useful, right? Highly recommended to get one. And also lastly, talking to different people, like in the space, or like-minded people or more experienced people in the space, right? And reading their or consuming their content, like Peter's content, Sui's content, and Ezra's content, right? This really helps you to build a very solid foundation, right, towards what you want to achieve in your financial goals. Yeah. So back to you, Roshan. Sorry.
Great, thank you. Now let's go on to question 3 here, getting into the nitty-gritty. Peter, what are you investing into today?
So currently, right now, in terms of assets, most of my funds are actually in the stock market and also property. Yeah. So but property, most of my properties are actually rented out, and it's self-paying by itself because of rental. Yeah. So most of the excess cash that I have, I actually put it into the stock market itself, simply because I'm an opportunist, and at this point right now it's a good time. So I put more into that. And the next thing that actually take up most of my money as well is actually the business itself. But again, when it comes to this business that I'm doing right now, it's generating revenue itself, but I just reinvest it back into the business rather than drawing a hard salary out of it at this point. Yeah, so these are some of the things that I'm really focusing on investing. And why do I do that? It's because number one, I believe that property at the end of the day, once it's fully paid off, then by the time I retire, I can be a landlord. So one of the things that I really like is that when I was younger, I saw some of my elder family members, when they retire, they just sit there and then collect rent every month. And I thought that that's really interesting, right? Yeah. In Chinese, we have that word called 包租公. In English, it's actually simply landlord, right? And so when I was young, I already had this idea that, I think it'd be great, when I'm older, I have like a couple of properties where I can just collect rent and, enjoy life with the money that I get out of it. And later in the days, I also realized that, however, when it's just about property, then you kind of have very little flexibility or liquidity with your money, because most of the money is there. So you do need some sort of liquidity in your portfolio that you can just take out the money and use it. And that's where I invest more in stocks and unit trusts and stuff like that. Things that allows me to actually take out the money slightly easier, right? And then also, at the end of the day, is the business that I'm doing right now, and which YouTube is part of the marketing of the business that I'm doing. Yeah, although the marketing itself became pretty much the thing that consumed most of my time. Yeah, and but it's great because at the end of the day, I believe that when you own a business, probably I'll run it for like the next 10 years, 20 years. But by the time I retire, I'll be hiring people, and I come in as a consultant, or I come in as just an owner, getting dividends out of it on a yearly basis. And, you're still useful, at the end of the day. You're not, just walk off and there's nothing that you can contribute to the society. Yeah, so these are some of the things that I'm investing in today.
That's a very comprehensive plan you've got there, really. Like, you've got a lot of things locked in there. I'd just like to ask the audience here, the attendees. I know it's 10:45 right now, but it looks like we're going on discussion for another 15 minutes. So we'll hit your questions at 11 a.m. Thank you for staying here with us. Before we move on from Peter, though, I have one more question for you, Peter. Do you have an asset allocation for where you put your money? How much do you keep in cash? Things like that.
Okay. Personally, I try to keep about 6 months of cash as an emergency cash. So when I was younger, actually, I don't do that. Only when I get my wife and baby, then okay, you know what? Let's make sure that we have that cash there sitting down there, right? But when it comes to stock investment, property, and business, I have to say one thing. It was much easier before I started off doing a business that requires me to put in more capital. Yeah. Previously, I was a financial planner alone. Then it was much easier to plan the money because everything is more stable. You don't really have to come up with a much higher capital and so on. So that time it was easier to plan. So for those of you who are actually interested in actually starting a business and using that as your main income source in future, right? The truth is, it's gonna be hard for you to really allocate. Yeah, because as business requires, you will need to put in more money. So you need to start drawing out. So what I would suggest is that if you are thinking about starting a side hustle that will eventually become the thing that takes over it, it's very important to start off with asset allocation. But if you have in mind to build a business, then try to be more liquid with your asset allocation. Yeah.
All right. Thanks, Peter. So Ian, what about you? What are you investing in today? What kind of asset allocation are you looking at?
Okay, thanks for the question. I really like Peter's response. Thanks for sharing with us. I guess like going back to it very consistently, I'm going to give you the qualitative stuff because that is what really matters, I think. I'm investing into the relationships that I care about. And it's not just, my personal and family relationships. It's also the business relationships in my day job. I spend a lot of time with, some business owners and some employees as well. And they give me a really good perspective on what kind of life I want to build for myself. And, what was my point here? Okay, so I like to see how they invest their money as well. I like to ask them a lot of questions because I'm super curious and sometimes they would entertain me also. So for me personally, what I've come up with is that I am investing mostly into an individual stock portfolio. And after that, there's EPF and it's PRS and all of that. But at the same time, I do know now that it is also very important to have a business for cash flow purposes. Because if we look at all the asset classes, okay, I haven't looked at property because I'm young, income is not that high, and I don't want to commit so much of my money for 30 years. I like the stocks liquidity, and I guess I would like to run a business for that cash flow into the future. But at the moment, I am still very happy to be an employee. So I just run my YouTube channel as a business. I'm trying to. It's something that's very new to me. And yeah, I guess eventually at some point in time, it will be sustainable to actually draw out a salary from there. And yeah, I guess that's something I'm looking forward to. And it's intriguing to me.
Thank you so much, Suyin. And once again, I'd just like to highlight that these are the opinions of the panelists themselves, their personal opinions on how they do their own, asset allocation and their own thoughts on personal finance and financial planning. Ezra, let's get to you now. What are you investing into today? What does your investment behavior look like? How much are you keeping in cash? Just some of the major highlights from yourself.
Okay, actually the key thing I want to highlight is actually the first thing you need to do is invest in knowledge. So because knowledge gives you power, and so that's where you can take action or take valuable advice from the knowledge. For example, the resources are all there. It's just a matter of you going out there, looking for it, fine-tuning it to your daily lifestyle, and fine-tuning it to make sure that it fits your risk profile, it fits your objective and whatnot. So for me personally, I invest in stock market, in EPFs, in robo-advisor, in a lot of other portfolios. But you need to diversify it because for me, you need to have one portfolio, for example, in high risk, so it's a stock market. One portfolio in medium risk, so there you have the properties, unit trusts and whatnot. And also one portfolio in low risk or no risk at all. So that's where you need to diversify your savings and investment and make sure that it works for you. And sometimes when you're getting older, you try not to take more risk than you can afford to and try to keep it at the proper level. So for example, like me, I invest in property as well. So because I understand that property is something that you won't have a depreciation by a lot. And also you can also use other people's money. So for example, you have a tenant, so that tenant pays off your property for you. So in the long run, it will help you in achieving your financial objectives and help you to achieve your passive income from there.
All right, great. And Ezra, maybe you could we take a look at the what is the situation with your EPF savings? Is that a big part of your allocation, of your planning?
Yes, it is, because as an employer and also as an employee, So I make sure that it gets invested. So I also use that EPF savings that I have to also diversify into unit trust, just to ensure that the money works for you basically, rather than it's sitting there doing nothing. So you have to make sure that it works for you.
All right, and let's move on to Ishan to wrap this question up. Ishan, what are you investing into?
Okay, thanks, Roshan. So for me, right, at this stage in my life, my main thing that I'm personally investing in, not so much on the asset, of course, asset is part of it, but the things that I'm investing in is things like business, right? Running this blog where part of the earnings goes back to this business as well. So business is one, but secondly, is more, which I find is more important, is invest in learning, right? Learning from investing in relationships like mentors, right? Reading books. And I personally find this extremely important. I guess a lot of people, especially of my peers group, right? What I find is after they graduate, right, learning stops there, right? Aside from, of course, their day job. But I realized that if we stop learning, right, after we graduate, then we stop growing. So I guess the first thing or the main highlight that I do at my age right now that I invest in highly is in books, knowledge, and of course, mentorships. So this is something I invest in. So if you but let's talk about the asset classes that I invest in as well. So for people that follows my blog, they know that I'm a real estate investment trust enthusiast, but just because, right, just like Peter said, he wants to be a landlord, right? But for me, at this stage of life, with my income, it's so hard to actually go get a physical property. So I was, as a university student back then, I was thinking, oh, okay, how should I actually get invested into real estate, but at the same time receive some form of rental? Then I come across this thing called real estate investment trust, or REITs. So I've been studying REITs for some time now, and it makes out of one of my biggest chunk of my portfolio right now. But aside from that, I do invest in low-cost robo-advisors, gold/silver, and cryptocurrencies, EPF and PRS as well. Yeah.
All right, great. Thank you so much for that. Now, I do want to dive into the EPF I invest in just a bit, but right now, let's talk about diversification. Very quickly, Peter, how do you think about diversification in terms of geography or even the assets? Could you just take us through that quickly?
I think it's an interesting subject. Yeah, yeah. There's this saying actually in the investment world. They say that diversification is the only free lunch. Yeah, so it means that whatever you do at the end of the day, there's always a possibility that things won't go well. But diversification is the only time that truly is a free lunch, right? Yeah, you just split your assets across different kind of things. So I personally think that diversifying in different asset class is very important. I know that there are some people who are very focused on a particular asset, like for example, some is fully on the stock market, and they think that if we are in the stock market, let us don't invest in anything, unit trust or whatever, not good, they'll say that. Yeah, and some people will say that Forex is the best or whatnot, whatever instruments like they are focusing on is the best. But I personally, I believe that as a person, you need to know every single thing. So although I do have quite a huge chunk in stock investment, but I still have unit trusts. And I still have properties, I have business, I have all sorts of different things. And I just want to highlight this one point, right? For those of you who actually do not have a lot of money to diversify, because diversification comes with money. That's the truth. There's a cost in diversification. You need assets, you need resources. I mean, like if you have 100,000 or 10,000, it's going to be hard to diversify, right? So yeah. One of the things that's easiest is actually seriously to use unit trust funds. Yeah, and when I say this word unit trust funds, it's not just unit trust, but it can be PRS or whatnot. Basically, it's a fund-based kind of investment vehicle. And firstly, I'm not being paid by CIMB to say this. I'm not being paid by Principal, but they do have a few funds that I really like. Yeah, and I really like, and whenever people ask me, I actually recommend them. Yeah. But what I want to say is that because one of the things that you need to remember is to diversify in geography. Don't just invest in the local Malaysian market, like Malaysian equities or Malaysian fixed bond funds or whatnot, but invest in overseas as well. And if you do not have a lot of money, it's going to be difficult. So having that access through unit trusts that invest in overseas instruments is probably your easiest way to get into that sort of diversification. If we talk about really instruments, financial instruments. So like one of the things I like is a CIMB Asia Pacific Dynamic Income Fund. Yeah, I don't know whether am I supposed to even mention names, but yeah, I'm sorry if I shouldn't. Yeah, but anyway, it's my own personal opinion. Yeah, but having all said this, these are easily learned because it's just things that you can Google online. It's articles. There's a lot of resources these days you can find out. But I would love to ride on a little bit of the bandwagon of skill. I think it's very important to diversify your cash flow. And what do I mean by that is that previously I've been talking about creating more cash flow with business, right? And some of the people here may be thinking like, hey, I'm not interested in business. But what I want to encourage you to do is think about not depending only on employment, but pick up certain skills that allow you to work and use it to get paid for. Like, for example, you see Roshan, he's a golden voice, perfect broadcaster, right? Yeah, and he reminds me of who, David Attenborough. He's a guy who's like, those of you who know David Attenborough and Morgan Freeman, the golden voice, right? Even when you are reaching the age of retirement, and Malaysia with Patrick Teo, people still engage them because they have that skill in narrating, right? And so that is something that would encourage you, other than thinking about asset class to diversify, think about diversifying your skills that can help you to generate income even in future. It doesn't need to be a glamorous big business. It can be just a skill in building a website. It can be just a skill in coaching. It can be just a skill in whatever it is that someone will pay you to do. Yeah, so that's my 2 cents.
Right, so very importantly, the 2 notes there, investing, diversifying the investments themselves and diversifying the cash flow sources. Great points there, Peter. Just quickly jumping over to, because we touched on EPF iInvest and using funds, right? So if you're looking at investing, if you're looking to invest through a broker or whatever like that, it can be very expensive to have a diversified portfolio. And more than that, it can be very stressful as per someone who's also personally invested. And this is where funds or ETFs come into the picture, right? And that's why we're taking a look at EPF iInvest as well. Peter, do you use the platform?
Unfortunately, I myself, ever since I graduated, I've always been working for myself, so I don't really have a huge EPF fund. I would actually advise most people who have been working for a long term, always tap into your EPS to diversify investment, because that is probably one of the largest funds that you have. And if you don't do anything with it, I mean, it's not to say EPF is not performing good. What I mean is that it's still good, but that is one of the very few funds that you can take out to actually invest in something else, to actually diversify it and actually gain more return possibly from it. So I think, yeah, it's great. And especially if I invest, if I'm not wrong, yeah, I would say 0 commission literally. Yeah, so for those who are actually have been complaining, saying that, hey, why the commission is so high, whatnot. Yeah, this is your time, man. What else are you waiting for, right?
Yeah, it's important to take note that there are other criteria if you want to take a look at iInvest, things like your age, and then also I think the fee ranges between sales fee to be accurate, ranges between 0 and 0.5% depending on which house and all of that. Let's just wrap up with the rest actually on this question here. Suyin, when we talk about diversification, I want to bring these 2 questions together. Yep. Diversification and using funds and EPF iInvest. Do you use iInvest?
Yes, I just started using iInvest this year. I've been looking into using it, but I had to wait to qualify for using it. So there are criteria that we need to meet in our account 1, minimum savings. And I like this feature, or I like the potential of this feature, because our EPF generally returns us a certain % every year. And if you have a look at the unit trust or the approved EPF iInvest unit trust, you can see historically, not consistent that you can project it exactly into the future, but historically they've performed a certain % as well. So if you want to diversify geographically into US or China or other emerging markets, that is an option. in terms of diversifying into my own, like wealth, net worth, and things like that, I do really like stocks as an asset class, but at the same time, I want everyone to know that I don't hold all my money in stocks. I also hold in liquid cash. Emergency funds, things like that are very important, especially if you are looking to sustainably invest. And also, like, even more important than investing, we really need to figure out our money habits before we figure out our investment habits. Because if we don't get those foundational things right, we can get ourselves into a lot of trouble. Like, say, if you need to pull out your investments because you need to pay for something, I think that is something that is going to really affect your compound interest. That's one. And also your investment psyche is going to really make you have a very bad experience. Yeah, so like diversifying in skill set, what Peter shared, I think is super important as well. And I can really relate to that because I was a teacher before this. And, you know, like, say if in the formal job market, if I were to reapply for another job, probably I can only get another teacher job. And that's scary. Skills. And
oh, there. So you know there?
Yeah, I'm here.
All right, great, cool. There just for a little bit, or maybe you lost me. But yeah, thank you so much for sharing that.
Sure.
I think we've got a few questions that come in here, and I'm just about to get into them. A bit of background sound there. Ezra, why don't you tell us a bit about your experience with diversification and whether you use funds or EPF I Invest?
It's actually boils down to the one fact that you don't put all your eggs in one basket. So I like this saying. So it doesn't fall away from high risk, high return, or low risk, low return. So you have to know what are the investment vehicles that can give you the highest return, and what are the investment vehicles that have low risk but give you a low returns. So once you know yourself, your risk profile, your risk appetite, so you know how to diversify your investment from that point of view. Another thing, I also started EPF I Invest recently when they first launched it. So my personal experience is actually everything can be done online, or everything can be done through the app. So it's a very fast and easy way for us to do diversification. So you know that, okay, based on your age, they also have their own calculator. Okay, so how much from your current savings or from your current EPF money inside there, so you can withdraw that money and also to diversify into other unit trust funds. And also talking about diversification and talking about unit trust, so it allows you to also do your own research, do your own comparison, and do your own fact finding. So you need to know is actually another way for you to educate yourself and be an informed investor, rather than you leave your money there and have a fixed return every year. So it also allows you to do more and get more return in the end. So it's a very good experience actually using EPF I Invest.
All right, great. Thank you so much. And let's wrap up with Ishwan then. Ishwan, what do you think about diversification? And do you use funds, EPF I Invest, that sort of situation?
All right, so let's address the latter question first. So EPF I Invest personally, because for most of my time after graduation, I am mostly self-employed, right? So just like Peter. So for me, my account one has yet to reach the minimum benchmark or qualification needed, right, in order for me to diversify into funds. That said, right, I have read about a book where is a local author, right? He started to plan for his financial freedom journey at his 40s, right? And one of the ways that he used, right, or he approached to his financial freedom is through investing his EPF funds, right, into the funds that are approved, right? So, and surprisingly, by doing that, right, he just a quick one. He started at 40 something. By doing that, right, he reached financial freedom, or he declared financial freedom at 55-year-old. So the point is this, right? If you do it properly, right, you know what you are doing, right? It is very possible, and as Suyin said, the potential is really strong and there, right? So that's about EPF I invest, but personally, I would say diversify into. Let me just quickly touch on the skill part. I guess, right, I just want to add on to what Peter said, right? You need to know everything, but at the same time, you need to, after you get to know all this knowledge, right, you need to find one very strong spot of yours, or in short, your strength, and really double down on that while having all the other skill sets around. So when you double down on that, you build your own niche, right? And then that is your most valuable strength and the skill set that you can monetize for yourself. So aside from investing, focus on learning different skill set, but double down on one of your particular strength. So that's from me.
Great, thank you so much for that, and thank you to all the panelists. Let's get into some of the Q&A in just a bit. But just I want to highlight that, you know, EPFI account, you can get access to the EPFI Invest through EPFI account. You have to go through, I think, the branch, EPF branch one time only to get that registered. 100% digital, and it's open to anyone. I think it was initially up to age 55. It's no longer that. And it comes with all sorts of different filters so that you can monitor your investments via the EPFI account mobile app. Now let's take a look at some of the questions that that have come up. Some of them are quite interesting here. And okay, let's start with this one then. How much should I start investing by age to retire comfortably? Any tips here? All right, this is a pretty good question, and I think it's just that first step situation. A lot of us may be unsure how to start, where to start, how much to start with. So many questions up in the air because it can be a very anxiety-riddling, scary situation. Peter, I think I'd like you to try out this question for us. What do you think about this? How much should I start investing by age to retire comfortably? How do you see the relationship between investing age and what to invest into?
Well, the general rule of thumb is that the longer you have, the less you need to put in to reach the financial goal that you want to get, right? Mm-hmm. Having said that as well, all these are just rule of thumbs. The question still comes down to how much do you want to accumulate by the time you retire. That makes the whole lot of difference. But just again, because it's such a general question, right? So according to study, it says that as long as you save about 33% of your income, then you should have some sort of a comfortable retirement. So that is a good rule of thumb. If let's say you're a fresh grad, just graduated. Yeah, if you're like Suyin, you're able to save 78%, then no problem. Probably save for 5 years, done deal. Yeah, kidding. Yeah, but because you must remember that EPF already helped you to save about 23% of your income, right? Yeah, so it means that although you do not see, but actually every month you are setting aside 23%. So what you need to do is minimally set aside 10%. Minimally set aside 10%. Yeah.
All right, thanks, Peter. Actually, let's follow up on that because there is a question, I think, directed right at Suyin. How speaker managed to save 78% of her income? This is a high savings rate. And yes, I agree, this is a high savings rate. Soon, maybe you want to highlight to us how you get this done. Do you use the bucket system? How do you keep that discipline as well?
Yeah. Okay. Yeah, unmute. I think I did. So for this, I think it came from a source of pain actually at the start. When I was a teacher, I was really not earning a lot of money. Unfortunately, the teaching profession is not very highly remunerated. So I knew that I needed to really be very crafty with my money. So I started with investing 50% of my income. So I started with that habit. And then what I focused on next is to really increase my income as I changed jobs, and now I'm in a sales role. And I guess I can share with you something a bit more personal. I used to be very ashamed of, leveraging off of being able to stay at home with my parents, and, they pay for meals if I'm out. So I do give them some money, but I did feel really bad at the start of it. And then I started to look inward and think of, I've been given this opportunity, I can leverage off of it. And what I can do in return for my parents is to, you know, spend time with them and treat them nicely. And, you know, because I've been so privileged, I can share this knowledge with other people as well. So that is my big secret to saving so much money, 78% of my income. And really, I think it's about prioritizing what matters to you. So 78% sounds like a lot. It is a lot. And if you follow a lot of financial Instagrammers, you'll see crazy amounts. They're saving like 90%. Yeah, and even talking about it, how is that achieved? I think that is really important, because if we share more with other people, then it is, you know, more believable, and it helps more people make it doable for themselves as well, if that is something that they want. And when it comes to, like, say, that high savings rate, I have a lot of tools that I use. So I am in a job where my petrol is paid for, my car servicing is paid for due to the mileage claims. Some meals that I have with my customers are business claimable. So that is all part of the system, and that helps a lot. So it's the nature of your job also will tie into how much you're able to save and invest. Yeah.
All right, great. Thank you so much, Surin. And I think that's really how much time we've got for the Q&A. So sorry that we can't get to all your questions, but the unanswered questions will get a response via email, and so we will get to that. Really quite some interesting questions here as well. Well, those were the two most popular ones, I think, the two big ones. Okay, actually, maybe we can touch on this one last one. The market is down. Should we keep investing? Ezra at mazadlabo.com, since you've got Labo in your name of your title, I'll give this question over to you. What do you think? What do you think about the market reaction?
Yeah, thanks for the question. Anyway, it's the most common question that I get all this while. So it's a matter of, okay, you see, we have this mantra where we say that you spend whatever after you save, correct? So what I normally do these days is you save, you invest, then only you spend. So once you have this flow going, so you know that, okay, you have allocation for saving, you have allocation for investing, and then the rest you spend it over. So once you have this so-called strategy, or once you have this so-called mentality, so you tend to invest each time, or every time you get your salary, or each time you get a bonus or whatnot. So you follow the system. So for example, if you get the bonus, 1 month bonus, for example, so you get 5,000 ringgit. So you save 10%, you invest 20%, and the rest you spend. You probably take out your family for family vacation or whatnot. So once you have this allocation, so you stick to the allocation. So whether the market is good or whether the market is down, so you keep on investing. Or we call it as a dollar cost averaging. So it's a pretty powerful tool. So whatever the situation, market crash, market whatnot, so you keep on investing. So because over the years, you get compounding, so you get a lot of other advantage to this investing. And also the diversification factor is also another good thing to follow. So you diversify all across few portfolios. So you have high risk, also you have medium risk, and you also have few in your low risk portfolio. So over the years, all these will add up, and then only you realize, wow, I should have done this much earlier.
All right. Thank you so much, actually, and thank you for highlighting dollar cost averaging. I think that's one of the most powerful things that most of us can do, whether it's and especially whether it's just regular investing, whether it's, for example, funds, that regular investment consistently, irrespective of how the market is performing over the long term. And on that note, I'd like to end the Q&A, and actually, Principal, and just highlighting the point here that really, failing to plan is planning to fail, right? Ignorance is not bliss when it comes to this sort of situation. You may feel safe now, but if you're not planning later on, it's going to bite you. And when it comes to diversification, EPF savings, EPF I Invest is one of those options there. And if we take a look at the next slide we've got here for you, we're going to take a look at some of the the ways to start investing through EPF, which you can do through your EPF. Through your EPFI account. So first you log in, well, obviously you log in, then you go to you select investments, transactions, and buy, and then from there you pick the fund house that you prefer. For example, maybe it's Principal, maybe it's not, and then you check out. And that's pretty much how you do your transaction. It's very simple. It's all online and quite easily done. And if we move on to the next slide, we're going to take a look at some promotions that Principal has for you today. You've got the touch and go one. So receive a 50 ringgit touch and go e-wallet reload pin when you register and invest a minimum of 2,000 ringgit with Principal through EPF Invest. This is valid from now till the end of the year. And the other promotion they've got for you as well is the Super 10 promotion, which is basically, it's a 10-day promotion from, well, 10-10. We're playing really nicely with the 10s today. It's 10 a.m., 10th of October. For 10 days, you're going to have this promotion where you can earn up to 1.2% of touch and go e-wallet reload pin when you invest a minimum of 2,000 ringgit, again, within the Principal Invest funds for the next 10 days. And this is open to all Principal EPF Invest investors. And you need to be you'll receive the promotion, more of these details through the emails once the webinar is done. And again, the two websites you can go to learn more about this. One is principal.com/my/en/new investor. And then you've also got principal.com.my/en/super10 if you want to learn more about these promotions. And I think if we take a look at the last slide, it's a big thank you to all of you for joining us today, spending what has been almost 1.5 hours with us, going through all the details when it comes to retirement planning. Thank you to our 4 panelists. Thank you to the audience for staying tuned with us, even though we went a little bit overboard with the details here. And a big thank you to Principal Asset Management for organizing this. My name is Roshan Karnasan, and this has been a retirement planning webinar from Principal Asset Management.